Boker tov, bonjour, good morning, everyone. Fantastic to be here again, and hope we'll move on to new topics and move forward, because that's what entrepreneurs do. How many of you are entrepreneurs, young startup companies? Okay, those are my peeps. Then who are those of you who come from large companies, multinationals, banks, insurance, et cetera, et cetera? A few. Okay, those are the people we need to get to and impress, because the revolution is happening right now. This is a time of incredible disruption, particularly in FinTech, and so I'm particularly excited to be here. I'm nervous about being introduced as an expert, because my definition of an expert is somebody who carries a briefcase, very opinionated, frequently wrong, but never in doubt. So I've got to be careful. I probably can learn a lot more from the rest of you, but here are some conclusions that our firm has come up with on a survey that we did, and it adds to it with some of the data that we find on FinTech from American consumers. We surveyed 1,000 American consumers, and here are some of the things that we came up with. Most American consumers believe that FinTech is on their side. It will help them do better with their finances, gain power over it. Autonomy, agency, those are all good things. On the other hand, for small businesses, it's tougher, especially since the last recession, since 2008. A lot of the banks withdrew, and it was much tougher. Day sales outstanding ratios, the time you have your receivables out, doubled in the United States from 45 to 90 days for small businesses. So big problems there. However, Americans believe they will be better off financially if they use the power of FinTech technologies. That's good for the entrepreneurs in the room and the large companies that start adopting the new platforms. Consumers prefer, by 2/3, to handle their information of finance, and I'm including insurance, mortgages, business banking, all kinds of stuff. They prefer online. One nice thing is that it's providing services to the average consumer that were reserved primarily for only wealthy clients in the past. We call that leveling the playing field. I'll come to that in a moment in more depth. And then here, it's really quite on the way toward virtualization. We're moving to a time when consumers no longer walk into a bank. Young people, I saw Pepper announced here as a new virtual bank, and their whole target market is people, young, particularly women, who don't ever walk into a banking establishment physically. So the question is, where do we go? Where do we go from here? And I'd break it down into 3 segments. Traditional corporate banking. This is the most difficult for startups to penetrate. It's the place where the large incumbents will face the best chance to maintain their advantages because of all the traditional needs that big banking has. Relationship banking, large balance sheet, the regulatory burden, the fact for very sophisticated and complicated transactions and international connections. So this is the redoubt of the large incumbents. They will, we think, be easiest to maintain their hold here. That doesn't mean that startups can't help them. There's not a complete competition to the death between startups and big banks. It's very much co-opetition. There'll be some disruption, some competition, some partnerships, all to the benefit. The consumer ultimately will always win, we think, if there's proper transparency and proper rules for competition. Now, in the middle, this is the area that we think has some of the best opportunities for startups. It's easier to address startups these days because of SaaS model delivery of technology and business models, the mobile phone, big data, AI, all the things that you'd imagine, cloud infrastructure. And this is the area really that we think has the biggest opportunities. Some of the big opportunities would be, for example, in tools for lending, insurance, payments, operations, underwriting, cybersecurity, know your customer, compliance. All these things are tough for reaching and expensive to reach SMBs, but can be helped with the tech that you folks are developing that we find not only in Israel, but in US, UK, Japan, China, etc. Then in the consumer area, this area faces generally difficulty reaching consumers, easier than ever before for startups because of, again, mobile phones and so on. But building a brand is expensive. We found in our investments that cost of customer acquisition is difficult. And this is the area where the regulators tend to be toughest. When a lot of people suffer any kind of financial difficulty, they tend to blame anybody with deep pockets. So the regulators are toughest here. Do I have to start from the beginning? And this is an area, I think, in the United States at least, this administration will take a more favorable view toward technology and be a little bit lighter on regulation than the previous administration. So we're expecting that this will be salutary. Every country is different, but at least if you're attempting to hit the US market, we think this will be an easier 4 to 8 years moving forward on regulation. Now, I mentioned before a theme called leveling the playing field. You all remember the cottage cheese protests here in Israel a few years ago, and young people camped out in Rothschild Boulevard protesting against monopolies and oligopolies in Israel and high prices and so on and so forth. And they had a point. They might have been very unclear about the solutions. Same thing in the United States. We had the Occupy Wall Street protests a few years ago. And they were occupying Wall Street right across the street from one of my limited partners' offices. And they were very angry. They didn't have, I think, a very good solution, but they were onto something. The rules have been somewhat rigged, partly by just the fact that the wealthy had the tools to get their business done, where it was too expensive to meet the needs of average consumers. Luckily, thank God, technology is advancing and helping make a path forward that's nonpartisan. It doesn't hurt anybody. It just makes it cheaper, easier, and faster to get things done. Remember, after all, the power here in a mobile phone today is more than what took a man to the moon 40 years ago. So technology advance has really helped. These are companies that we have invested in at Blumberg Capital. We're based in San Francisco. We have offices in New York and Tel Aviv. We invest in about 5 or 6 countries, mostly US and Israel, Germany, UK, and Canada so far. We're open to anywhere. We find that tech entrepreneurs and engineers are spread very widely around the world, but there are a few hubs that attract them, and Tel Aviv is certainly one of them. And then there are the banking centers where we need to participate and help them partner up with the big companies and reach the large markets and capital markets. Now, all of these companies have different models, and I won't go into all of them, but just a few that help folks. I'll pick one, for example, EarnUp. Where is it? Right here. This is one that helps people automatically pay down their mortgages on a regular basis, so they never miss one. And it doesn't have to be just mortgage. It can be student loans. It can be personal debt, car loans, any kind of debt they have. It manages your debt for you. Not on a simply rote basis to every month the same payment, but it optimizes so that if you have a little extra money, it'll suggest you pay a little bit more or twice a month so that you shorten the mortgage or the payment and reduce the total amount of interest. That was available for people who had private family offices, but it wasn't available for the average consumer unless they were a mumche, in finance, and an expert. And so this is something as an example. Another one, let's take FIEX. Some of you know Uri Levine, marvelous entrepreneur who created Waze, and his co-founder and CEO, Yoav Zorel. They figured out that the DOL rule, the new Department of Labor rule that says transparency is required for consumers, means that brokers in America have to now be fiduciaries when they're selling any kind of retirement investment accounts. How can you be a fiduciary if you don't fully disclose the fees that are being charged for those mutual funds? So FIEX has done an amazing process with machine learning and optical character recognition and a number of technologies to decode thousands of IRA and 401k plans, and they can actually show each consumer what they're actually paying and then allow people to compare apples to apples. These are the kinds of things that I'm saying are leveling the playing field, and they're being adopted. EarnUp is being adopted by consumers and mortgage companies to help their consumers make the payments, and FIEX is about to be launched by 3 of the largest institutions in America to help their consumers buy with confidence that they're getting fair value and right kind of pricing on their fees. Now, Israel. Why Israel? Last time when I spoke here, Israel, yes. Last time I spoke here, I predicted, this is many years ago, I think it was even before your conference, it was Ariel Sharon was the prime minister at the time, and he was meeting with Colin Powell. That's how long ago it was. And at that time, I predicted Israel had all the ingredients to be a FinTech powerhouse. And I'm really proud of what you have done here. You've really moved ahead. Both governments, both parties have moved ahead, helped with deregulation. The economy has moved up. The technology leaders have helped the FinTech, because think about it, crypto and all the technology from cyber are very allied. The mathematics really drive this sector forward. So you guys are doing tremendous. You know, the Jewish people in the diaspora and in Israel have a huge history of literacy in finance. Because we were a literate people, because we were a networked people of trust relationships all across Europe, the Middle East, et cetera, we had these trading relationships that fostered then the first bond markets in London, sponsored by the Rothschild family, who are investors with us, and many other of these large families, the Safras and the Montefiores and so on. They created the first bond market, which liberated capital, allowed it to move from the agricultural gentry across to many entrepreneurs that were creating things like the steam engine and the railroad and so on. That was what really launched the Industrial Revolution, and I would argue it was the greatest liberating force in history. The freeing of finance, the freeing of capital, and allowing it to move away from agriculture really creates the stage for our modern world. None of this that we see around us would exist if we didn't have free capital markets. So the Jews have been set up for that very well. But we like partners. So Israel, land of immigrants, and now international networks. And that's the other thing Israel has. Not just because of the diaspora Jewish communities, but because of all the visitors here that have come from multinational corporations. Israel is now a destination on the tour bus of innovation. And I don't mean it in a patronizing way. There are so many delegations here. I've met with folks from Gulf countries, the Arab countries recently, China, Japan, Singapore, Korea, Latin America, France, England. It's amazing, as you see here among you. So that combination of the mix of people. Math and algorithms we talked about, the innovative culture, which has been described so well here, that there are not many chiefs, lots of chiefs, no Indians. Everyone has a 360-degree point of view on an opinion. Acharai, that you get from the military, after me, that kind of leadership. That's a very good thing for innovative culture. And then the international networks we've talked about. I think the global perspective is increasing. When I first started coming to invest in Israel, there were almost no MBA programs. And I'm not saying MBAs fix everything, but they are taught about markets and how to understand that. And then many of you spend years abroad. How many of you have pursued some part of your schooling or career abroad for, say, over a year? See, that's rare. In America, very few of us have lived abroad. Most Americans stay at home. We don't speak many languages. Most Israelis speak more than one language very well. So these are all very good values. And then your financial stability has been remarkable. When we had the mortgage crisis in the United States in 2009-10, your economy hummed along and went right through it because you didn't mess things up from the government point of view like we did. So these are reasons why Israel has a very strong basis, and I think you will continue if you remind yourselves of the following. Keep the markets open, level the playing field, try not to have monopolies or monopsonies that can be, or oligopolies that control things, because that is an enemy of innovation. You want a really dynamic, Schumpeterian, kept creative destruction model where there's a lot of change, and it's risky for incumbents to, what we say, sit on their laurels. We want incumbents to be nervous. We want them to adopt and move and change and keep up. And so the answer ultimately is we have to adapt, adopt, ulehitraot. For those of you who don't read Hebrew, that means, adios amigos. And the basic idea here is that the world is changing very fast, product cycles are shrinking, capital moves wherever it's wanted, and it stays where it's well treated. And entrepreneurs are leading the day because they're finding those triangulation points that get rid of those messy social problems of the cottage cheese protests in Israel, the Occupy Wall Street people, by bringing forth better technology so that we too can go to the moon, everybody on their own in the future. Whether it's driven through FinTech or other technology, you entrepreneurs are leading the way. So if we have time, I'd do a couple questions. What does the timer say? Yes, no? 2 minutes, perfect. 2 minutes of questions. Who's first? First victim. Otherwise, it'll be like business school and I'll call on you. You can see one in there. In the back? Yes, sir. Pardon? Oh, just shout. I'll repeat your question. The gentleman's asking, is it fine to send an NDA to an investor? It's a yes and no question. To a VC, no. We see 4,000 business plans a year, and we're not the largest venture capital firm in the world. We could not possibly sign NDAs for everybody. But we do keep confidences, and that's our reputation on the line. I would say if you're pitching a corporate VC or a company on your product, that's a normal course of business. Mutual NDA between the two is often a good idea. Yes? Any more questions over on this side? How about somebody in the front? What's on your mind? Anything that's, you're from a big multinational. What would be interesting to you from the VC point of view? Yes, ma'am. Anything on your mind? Don't want to put you on the spot. No? Okay, shy. All right, anybody? Yes, sir. Okay, excellent. The gentleman's asking a question. Are we finding companies that are combining both sides of the thing, lending and assets and management? I'll just say it generically. I think you're describing a marketplace. And yes, we're definitely investing. We love marketplaces. Lendio, I don't know on my list, is one of them in the US. SMB's one-stop shopping, whether you're trying to get a business mortgage, a line of credit, equipment finance, factoring, and then you have lenders on the backside. So both sides, yes. We see it in a lot of areas. We like it. Our newest investment is somewhat FinTech. It's a containerized shipping marketplace called NYSHEX, where it's Blumberg Capital, Goldman Sachs, General Electric, and 4 out of the 5 top shipping carriers. So we like that. I didn't even know this. Entrepreneurs teach me things every day. There were no marketplaces for containerized shipping to have shorting, futures, contracts, et cetera. So that's why we found it attractive. Do we have time for one? Quick one, very quick.
What's the biggest mistake startup founders make?
The largest mistake startup founders make, I think it's been in the consumer side, assuming A, cost of customer acquisition was easier than it really is, and B, the regulatory burden that would face them in the future. And I would point to the American companies. Nobody, I'm not blaming anybody, but see what's happened to Lending Club and so many of these in the past. I'll talk to you anywhere after this, but thank you very much. Time is short. Thank you.